All right. Hello, welcome to episode 20, week 20, founder log, whatever. I guess today's episode, or at least the lesson to be learned briefly, is scope growth, where you have an idea and then you pick and prod, and then you end up working on something for multiple hours. And for now, at least, right, this is what I was going to initially go through, right, and say, all right, here's the data, here's the yen to USD or USD to yen, whatever the conversion. How does that look like? The case for forecast events. But then I kind of went through this rabbit hole where I was like, well, why not just grab uh, almost the last 90 days, whatever. I thought I'd capture 90 days of data, but that didn't not quite, just a week off, right? So since the beginning of the year, there's only been 82 days of trading per se, or market trading, whatever. The market's been open, whatever. And naturally, or at least lately, I've been trading forecast events on yen, and that has been working fantabulously. I wanted to kind of go and talk about the percentages and stuff. They'll still do the presentation. I think this is just a lot more. I kind of ended up turning a pet project into like a, I don't know, multiple hour long project, day long project, whatever, weekend project, whatever. And so I'll get that out. This might be end up being a pre-planned video. I'll see with that. But like, grabbing this data is weird, right? So I just sourced this from Wall Street Journal and just grab some type of data source. I think it comes from FactSet, but I'm not 100% on that. Not really. It's really, like, where the data comes from is kind of irrelevant, but capturing that. So this looks jank, and bear with me, but all that really matters is this chart to the left, where I have five lines on there, going from the open, high rate, what is the market high of the day, the high of the day, the low of the day, and then the close, along with the predicted value per se, which I kind of grabbed from running a regression. Now, it's been like 4 or 5, not 4. Yeah, almost 4 years come like December or whatever the world of 2022 since I've done my last actual regression for a college class, and it's just like having to try to capture that the formula per se to spit out number, which from here, right, you have your coefficients or whatever. For some reason or whatever, obviously, I think more statistically, or like from a more engineering based point, the financial engineering is a joke, but to some degree, like, where is this capture point, right? And you have your like upper and lower. I thought I was playing around with the forecast sheet thing, and it was just not satisfying me. Where there was just this mega range, and I think it's on this page. Yeah, there's like this 14 point yen like variance between the upper boundary and the lower boundary, and it's like, what the hell is this? When the average, like the actual predicted value, looks a little more reasonable compared to like at least late recent, like the close, or what yen's been trading for. Like, it makes sense, obviously, because if you subjectively speaking, or naturally speaking, if you're dabbling with something, the fluctuation, like on average or whatever, like week to week, yen's trading somewhere in the ballpark. At least late, like this last week, it was like in a 5 yen trade. It's range bound within like 5 or 10ish yen. So that 14 is kind of strange, and I didn't quite capture the low, but I just saw it like 152. But it's been stuck above 150. So I don't know. Recency bias aside, like, you can kind of capture it. It seems like you can capture it. But obviously, who knows? Tomorrow, the price of yen who knows what the hell it's going to be tomorrow, right? Or I guess technically Monday or Sunday because their market opens at like 6 p.m. CST. So that's fun to know, especially because going there soon. Like, here's my predicted values, and then I wasn't too certain with the residuals. I'm not gonna lie, I was just listening to a stats prof talk about this, and it's just like, I just want to output this and get my outputs, and I'm more concerned about the output rather than the residual. So there's that standpoint, and I guess that's it, at least for now. I mean, like, in general, it's just a lot of planning or like mental planning on the part of vacationing and whatever, but you're still like, I want to build something here, and it's just like, when you're tackling something within, I don't know, a certain subset where, I can work within this, but I really, really am starting to just have a bunch of disdain for the 2% restricted. Now, jumping back a little to this other standpoint, I think this will be a lot easier to explain or describe or show with like charts and just running through PowerPoint. But like, let's say capturing the last 2 days of yen, forget Bitcoin in this case. I was just grabbing this for the heck of it. Oh, I didn't even finish the whatever. This is a work in progress too, so bear with me. But like, at a random entry point, let's say, I believe I captured the 23rd's data at some afternoon, like on, I want to say like 4 or 5 p.m. CST. Any of these probabilities for yes or no, these trades per se, either end up at 1 or 0, yes or no. Does it happen or does it not happen? Is it going to be above? Is it going to be below? Number. But is there interest in, a certain number? So let's say 158 or 158.75 or whatever on the 23rd or 22nd was 70 something percent, like visually speaking. But there's no market for it because, yen was probably sitting at that already. And it has this this normal distribution across whatever price points. And, looking at that, you're like, oh, well, how do I go about this, tackling it? And at least right now, I'm kind of capturing that sentiment where, okay, hit the highest percentage basis as a trader, naturally. What is the highest capture point to stay alive and retaining the highest probability of success, per se? And with that, I've come to the conclusion, right, to capture the high probabilistic sides of the tails, right? So let's say looking inward or throwing out a strangle, right? I believe it's going to be within this range, and I'm not too certain what the level of confidence is for both those probabilities. I'm going to have to double check that. I mean, the whole thing that spiraled this whole viewpoint was stats and probability. Two independent, not variables, outcomes, and like slamming them together, seeing what the probability is of both of them happening, and just kind of capturing. So in this case, right, at least visually, to make this simple, 60%, there's 40% left for this to become a whole one. And so for every dollar, it's an additional 40 cents, or however the hell that ends up working. It's not exactly that, especially with the contracts values being funky, where visually it could be 60%, but the market's actually saying it's 74% or something. And that's not always the case. I've been doing this for maybe a month now, I think, and to varying success. But like capturing that in the upper echelons of the what you call like probabilities. So let's say I don't want to capture, make this individualistic, something or risk at 60 or 70%. why not just capture it north of 80%, and the risk is the risk, right? Like, and that might be a little more arrogant in a sense where, you're trying to capture return. There is a level of performance chasing there, but within those two ranges where the highest probability is happening, it's like, well, you add these, capture the overlap probabilities probably somewhere around what, like 80% of the combines, something like that. And that's just, pulling a number out of my ass, right? But it's simpler to kind of describe it. It was like, okay, 94%, and whatever the weighting is plus that, or times that. I forget the overlay, but you kind of winging the two, and right, so it's like there's 7% left in, I don't know, gain, or 6%, and so repeating that daily is kind of it's part of the motion or the machine that I'm trying to understand. And without a doubt, I think like setting these parameters up, I could probably automate this. I would love to learn to code. I'll probably, whenever I figure out the Claude thing, honestly, it's just setting up for the subscription and getting that for the company or whatever. That'll be pretty easy to set up, I believe. Or it's just a little probabilistic kind of capture point. Or setting something up. I don't know how that would integrate. And I mean, I could still see it anyway, especially as what, like a pocket fund per se. And I don't know. I mean, like visually, intellectually, engineering wise, it's like it's pretty, I don't say easy or simple, but it's visually, like I can see it. The vision's there. Easy, like what is it? Plug and play. Where it's like, okay, well, on any contract, any forecast event, whatever, buy the probabilities north of 80%, whatever, and like size that appropriately, and all the general portfolio management or gambling management, treasury management, what else, like the your pool of funds, that type, I guess that is treasury management in a sense, and like managing the cash flows and risk per se on that type of level. And I don't know, I wanted to do this with the normal curve naturally, but well, I mean, playing around with yen is kind of an easier argument to say than Bitcoin, which I think I've had mixed success with too. But jumping in on like the higher percentages, right, like 70% or north of that, at least for me, seems to work. And obviously, like there is recency bias. I wouldn't say survivorship bias, but I think the what is it, compounding effect is kind of what I'm trying to capture. Sadly, it's like what, sub 4-digit numbers at the moment, but over time that should be able to, I should be able to scale. I mean, at the end of the day, I'm trying to figure out a way to engineer a solution where instead of burning capital doing the forecast event stuff, making that an actual operating arm and or portion of the company that I can scale up, or actually create relatively or reasonably decent returns for, even if it takes, I don't know, a year or two, with pocket change or pocket funds, whatever, as most of our assets, whatever, cash capital is tied up into two investments, and that thing's a mess too, where like I was able to do this trade on a certain owl company for like 20 weeks. And I think that I've been pretty consistent with saying that trade kind of broke a week or two ago. Even if that return, like the capital generated, was worthwhile, like is kind of neutered the unrealized loss. And now it's like, all right, well, there's certain losses when it comes to like realized losses when it comes to rolling, and due to the commissions and stuff, but trying to regenerate that it to a degree. With something that is even more risky is just kind of an interesting angle to work around. And I don't know. I think there's a certain perspective out there in the market where certain character, or at least certain retail actors are degenerate gamblers. Meanwhile, you're like if I see it, I can understand it, but to not look like a degenerate, here's what like I see as data, so that someone actually sees what the fuck I'm doing, right? So that's all I have for this episode. I think, oh my gosh, I thought this was gonna be shorter, but expect to see that PowerPoint, that presentation, whatever. It's gonna be kind of like the quarterly, annual, whatever deal. Obviously, I want to capture that kind of collegiate, presentation approach and view. I think that's kind of the style I like to go for. Or it's just like, here's my idea, here's my thought, whatever, and I'm gonna work with it. And then potentially in the future, I think come the end of the quarter, I'll do like quarterly kind of outlooks, just on my end. I'm just dabbling with like 2 equities in the company account, my own personal book, and an account I manage. I don't know if I made that public or not, but the cash flow plug per se in my company. And that's about it. So thanks for watching. Leave a like, subscribe, comment below, ring the bell. Thanks for staying around for 20 weeks. If you caught me at week 20, tag along. You're in for a ride. There's 34 more weeks, and I'm excited, hopeful you'll enjoy the couple of projects that I will have come out through the next month, sometime starting in the middle of the next month. So thanks again, and bye.